So delayed gratification is like the theme in building a
Mm.
company, right? I mean, if you build an RIA, it's a similar thing. Like it's its own version of a company. The instant gratification is I'll trade you labor, you pay me this cash. And so in building a startup, one theme that I would say was something I would find myself journaling about in the tough times, right? Which then became the stuff I wrote a book on. Was that there are other ways to cash out the experience before it's the money.
Mm.
And so maybe cash out's not the right word, but if I'm going through this
Value
tough
out.
thing,
Yeah.
yeah, like that is no matter what I'm going through is going to be some experience, some skill, some perspective that is compounding, like compounding interest, that maybe it exits out into a cash deal someday, or maybe it exits out into, well, now I get a more unique job because I have this experience base because I tried to, pitch 200 angel investors. And so I learned these things or I made these relationships. And so what I found myself, this was a 12-year journey. The first 4 years hit a total brick wall. We had to pivot. Then it took 2 years to get to our first $1 million revenue year. So now we're 6 years in. Then, when we finally get a venture capital firm to write us a term sheet, it's what's called a down round, a pretty major recapitalization. And so that was a combination of bad news shareholder calls to 100 angel investors that were already on the cap table, which is atypical. And then it was also realizing, okay, we're going to have to re-earn our equity in a new management option pool. So you're 6 years in, and there's a lot of reason to like just step out and quit because like, well, what? We're certainly not millionaires. 6 years in, we're like starting over with less of the pie. But if I looked at it from the other things of, okay, well, now my experience is going to continue with a structured board. Now we're going to have, this amount of capital in the bank to deploy in our go-to-market levers. Now I'm going to learn what it's like to lead a company of 100 employees, right? And so there's all these things that even if it never got to an exit, which happened then 5 years after that or 6 years, I still felt like the compounding interest on that experience, network, and everything else was growing. And so that I think is the mentality you have to have building a company because you may never get the cash out.